But Kunal is here to talk about how much of this cheer is already behind us and how much more could we see, given that we made it back, Kunal, to 24,000 yesterday. What next in store?
So yeah, this 24,000 mark is again a very crucial pivot point. We've been swinging around this for the last 30 days for the index. But then more importantly, I think the volatility which is there across the globe, at least our markets are not exhibiting that kind of a volatility, at least in terms of the index movement across the globe. So that I think is a big positive. I think except for that last week, couple of days, where we saw the index, for 2 odd days or 3 odd days being a little bit more volatile. But I think across the last 1.5 odd month, we've seen our markets to be a little bit more resilient. Now, what happened yesterday and I think on Friday second half, when the markets start to show signs of recovery, there were few signs of sectoral tilt which managed to look attractive. You saw come back from the IT names, you saw come back from few of the private sector banking stocks, and then more importantly, auto stocks start to make a good comeback for themselves. So which means that the markets are looking at few sectoral tilts, which could probably indicate that this trend should sustain with a fresh set of leadership qualities.
And what is that stock bias that you see? You talked about autos coming back to the fore. Banks, IT, the heavyweight sectors? Yeah,
so I think banks should play a key role. Financials are playing actually a very strong role. You've seen the likes of Bajaj Finance, Shriram Finance, and then the mid-cap end of the financial services name. They are looking quite strong and solid for themselves. And then auto stocks making a comeback, IT stocks making a comeback. So, the concern for the market was that the large cap tilt in terms of sectors, they have not been participating. That started to improve, where you're seeing many of the stocks starting to show signs of recovery. Of course, many of these names, the sectors which I'm talking of, are still below their long-term moving averages. But the fact that these stocks are consistently showing signs of test towards their breakouts or their resistances eventually indicates that maybe over the next few weeks, few days, these stocks could break past about those resistances and start off a new trend for themselves altogether.
Kunal, if you look at yesterday, the entire rally was based on shorts getting covered. And from index point of view, we are sitting at 55% of rollovers for Nifty and Nifty Bank. But individual stock wise, we are looking at 65 to 75% range of rollovers which have happened. So a lot of stock rollovers have happened yesterday. Now today is something where with the balance index rollover is going to happen, which makes it a little more volatile for the market today.
So, frankly speaking, Sajid, the last 3 weeks, Tuesdays have been very difficult to anticipate because it's the expiry week and today it's the expiry and the monthly expiry. Yeah. So last 2 or 3 Tuesdays have been very critical for the markets because Tuesday we generally see a 100 point to 150 point kind of a sell-off or a correction for the index. But then the backdrop prior to that is also very, very important to see that how the Monday panned out or how the previous Friday panned out for the indices. So last Friday, for example, we were negative for the index, we recovered. Yesterday, we were quite handsomely positive for the indices. So it's going to be difficult to expect and anticipate which side the markets would tilt towards. But yes, today it's going to be a bit of a volatile day. In terms of rollovers, I would sense that, we've seen this phenomena across the last 5-6 expiries that the stock rollovers generally happen prior. Majority of the stock rollovers generally happen prior because there is excess volatility to handle on the day of expiry from a stock-specific rollover perspective. That's why the index rollovers, or the majority of them, they take place in the last T-1 or T-0 days for the rollovers. And stock-specific generally happens, or I think a majority of it gets completed prior to it.
And that's what's going to happen today. Index management today, basically last 90 minutes of it, because we have nearly 30,000 crores of open interest position between Nifty and Nifty Bank that needs to either roll over or unwind today.
Yeah, so that's why I think on the expiry days, what you see is you don't see stock-specific volatility, but you see index-specific volatility because of the rollovers which are pending. See, we've been trading into the month of July with a very fair positivity. There have been few odd days where the markets have been volatile, but when you look at its summation as the previous month, June, etc., our markets have been stable so far. So when the markets, the recent history of the market is stable, the expectation is that maybe the markets going forward into the next series would exhibit the same behavior. So for example, if the month of February was very wild and volatile, then the expectations towards March will be again very tough and volatile. So far, because the month of July has been decent, I would expect that the rollovers going into August could be slight positive. That would curtail the volatility to a larger extent, unless you see a completely different change across the globe.
Any picks for today?
Yeah, so two buy calls. Bajaj Finance apparently comes back into the list in terms of a breakout candidate. As we've been highlighting that the financial services basket has been looking attractive. So we'd look at Bajaj Finance as a buy, 1084 as a target, stop loss to be kept at 1031. The second would be Aban Maruti. This could be an interesting pick because on the short-term charts, the stock is on the verge of a breakout of a series of multiple swing high resistances, as well as a potential breakout of its key moving averages. So we'd look at 14,250 as a target, stop loss to be kept at 13,400.
Okay, on that note, let's take a very quick break. Lots to talk about in terms of individual stocks. BEL, the market is going to be reacting to those numbers, Coforge and many others. And then, of course, you've got the big ones, Unilever and L&T, due to report their numbers. We'll tell you what to expect on the other side.